Hey there, it's Jason here from Forex Trading Watchdog, and today is May the 16th, 2020. And it's been a while, hasn't it? It has. All because of this plandemic that has happened. So anyway, I decided not to do any videos. There is so much going on in the world, and we're in very, very different times for some. We're in very, very horrible times for others. It is just, in my opinion, not a good time in the world. But anyway, hopefully we'll get through it. That's all I can say. So anyway, let's get on with this here. It's been about, I'd say about a month or so. Oh, actually over a month. I think it was April 11th was the last time I shot a video. So yeah, so it's been about, about 5-6 weeks. So I'm sorry about that, but like I said, we're not just watching this on a movie screen on a TV, okay? It's really happening. So, I just didn't think it was appropriate to do videos. But here I am doing a video again because I'd like to show you guys that divergence works. And, it's up to you if you want to trade it, especially if you need to make, financial funds these days because of certain situations. They shut down the world economy, but they never shut down the markets yet. Anyway, so we got to see what happens. So anyway, here we go. We're looking at the pound dollar, and we're looking at the 4-hour, like always. Okay. So we're going to go back to 3 weeks ago. We had a high and a higher high and a lower high on the indicator. So if we would have got in right here, our stop would have been at like 135, and as you can see, it went down 244. You would have hit your first target, and then hold on, there's right here. Yeah, you still would have been in the second one if you let it go to what was our stop? 135. So 270. Didn't hit it there, but it hit it like right in here somewhere. You would have got your both targets hit. However, if you didn't do that trade and then you did the next trade, okay, there was also a trade in here. I'll show you because I always show all the trades. Here's one right here. Okay, a low and a lower low, and a higher low, as you can see right here. Boom, boom, on the indicator. So you would have got long right here. Your stop would have been here, 115. It didn't go 115. It went up 89. So whatever you wanted to do there, whether you're someone who moves your stop to +5 or break even after you hit, like, say, 50 to 75% of your potential first target. So if you did, it came back down and stopped you out with +5 pips. If you didn't, well, it came down and, it came down and eventually hit your stop. But anyway, then it showed the next signal right here, hidden divergence, to sell right here. Stop here, 99 pips, and it's gone 258, so you got your 2-to-1 win-loss ratio. Okay, and I could plop on the Fibonacci here. Let's see. So we'd take it from the high to that first low right here. Didn't come back up to the 38. So let's see. Let's take it to the next major low, which is down here. As you can see, it bounced. It came back up and went through the 38. A little bit past the 50%, and then came crashing down. So that's about all the Fibonacci entailed there. That's it for the pound. Okay, so let's look at the Swiss now. There was a trade on the Swiss, I think. And it was up here. And you would have got short right here. And look at that. It almost came up and hit your stop, 68 pips. It went up 63 and a half. Gotta love when it just misses your stop, eh? It's just like, wow. But you know, there's a lot of people that get out of the trade because they fear it's going to hit their stop. So once it started shooting up here somewhere, you guarantee people would get out of their stop, get out of the trade, and close the trade. But anyway, 66 pip stop, and it went down 148. So almost hit the 2-to-1 win-loss ratio. And there's no divergence down here to buy. And either I'm too lazy to look for it, or because I don't really see any divergence down here. Well, actually, I do. Let's show it to you. It's right here. Okay, and on the indicator, right there. So you would have got in long after this big engulfing candle. And 54 pips, and it didn't hit your 54 pips. So that probably will be a losing trade if you're still in it. You're at break even right now. Let's take a look at the Aussie dollar. So in the Aussie dollar, we had this here from 4 weeks ago. Right here. Lower high in the indicator, lower on the price chart. Entry right there. Stop 62 pips, and it went up 255. Okay, then we had a double bottom right here, and let's see that right there. Why did I draw that on there? Let's see. Oh, okay. There was a hidden divergence right here. And that's what that was right here. There and there. Right? Okay. And you would have got in here, and it went down 41 pips, and your stop was 57, so that's a losing trade. Then you had a double bottom here, like that, and like that over here, and you would have got long right in here. Your stop would have been 80 pips, and you hit 80 pips. And now it's gone sideways this past week. Let's take a look at the yen. The yen, we do have some divergence up here. It's like a 1, 2, 3, 4, 5, 6 top. I guess 6-star top, we want to call it. I don't know. There's some bullshit in there, let me tell you. It just played with people for a whole week there. Alright, so anyway, you would have got short right in here somewhere. Stop would have been 73. You would have hit your first target. Okay? Then we have our second trade, and it is right here. You would have got long right here. Your stop would have been 34 pips, and it went up 143 pips. And now I don't see anything. So let's now take a look at gold. Gold did some funny, funky things too lately. In the past 5 weeks. Not really good divergence. You got a double top up here, so if you went short, right, went down 500. So that was a good one. That's a good double top right there. And wow, the power on my headset, it starts to go. I gotta pause for a sec. Alright, I'm back. I plugged her in. It was beeping in my ear. Beep, 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 beep. Juice me up, please. Okay, so we definitely got some nice pips here. Went down 500 pips, man. And your stop would have been 360. So you definitely hit your 1-to-1 there. And then we have a low and a lower low right there. And here it is on the indicator. Okay, you would have got long somewhere in here. Up it went 466 pips. So that's pretty good. Now, up here, I guess you could say there's a double top here, and you could have got short, and down it went again, 500 points, right? It's another one. It's a little tiny one. I wouldn't suggest looking for these little tiny ones like this, but it can work. As you can see, it does line up. See? There she be. See what I got short in here? Boom. Down it went. 489 points. And then here's another low and lower low. But it is not divergent down here. You see? So there's no divergence to buy in here. And then the next trade, I believe, is this one, which is hard to see. Hidden divergence. You can see right here. Ding, ding. You can see they are diverging from each other. See what I got long here? And up it goes. 472 points. Pips, whatever you want to call it. It is gold. And that is the 1, 2, 3, 4, 5. Did I want to look at the euro? Yeah, I guess. It's pretty crappy though. Here was a sell trade here. It went down. See, we got short here, 60 pips, and it went all the way down, 200. And you got more divergence down here. It got in right there. It went up 198. I was gonna say 200. But there's no divergence here and here. And when we come down here, guess you can say there's divergence right here, double bottom, like that, and it spiked right up. And if you got in, say, even right here, your stop would be 82. It only went up 48. So it would look like when it came back down here that it was gonna, you know, they smashed it back down again. They smack it up. You see how they play with people here? They smack it up and then they smack it down, right? They smack it up and they smack it down. Smack it up and smack the effer down. You know, it's very annoying to trade some of these currencies. I tell you, man, I'm being totally straight up and honest with you. And I want to tell you, for the most part, don't trade the euro. I don't care if the spread is 0.1 of a pip. Don't trade it. It's a joke. But anyway, I do show it for some people who do want to, you know, they want to check it out. So, but it's been bad there lately here, smacking it up and down. But there was some good divergence, I'll have to say, back in here when, you know, the pandemic started, okay, over here. So anyway, that's about it, I guess. I covered the euro, the pound, the Swiss, the Aussie, and the yen, and gold. Okay, I think that's enough. What do you think? Yeah, that's enough. So anyway, if you like this video and you like to trade divergence, do me a favor. Hit the like button below the video. Subscribe to my channel. More great videos are coming. And if you want to learn how to trade divergence, you can find it on my blog, okay? So anyway, thank you for watching. Thank you for listening. And my prayers are with all of you. And I hope all of you get through this okay. Good luck and good trading. Once again, this is Jason from Forex Trading Watchdog.